2026 Taxes Simplified for U.S. citizens living abroad. Avoid double taxation living overseas. Hey everyone, I'm Alex, a lead consultant with Expat, Exact, an expatriate and relocation agency aiding you in finding the destinations that match your destiny. And in today's video, we're going to be talking about U.S. citizens living abroad and your mandatory tax obligations back in the U.S. with the IRS. This quite often can be an area of ambiguity because we assume we can't assess a tax situation until tax time gets here. But that actually takes away from the length of time that you have to plan. And so with that, we do want to make sure the process is streamlined and it's not where you have to be fearful of the process, but more so you're educated about it. And this is why in this video, we're going to have visuals because unlike a lot of other videos where there could be confusion around the numbers, with these visuals, it's going to provide the level of clarity surrounding what it is that you're looking at in terms of exemptions as well as tax credits, but also the programs available to you that could reduce your tax liability to 0%. And this is also going to be inclusive of commonly asked questions where you absolutely need to know those answers up front. And more importantly, you do not have to wait until tax time for you to be able to start making decisions now. Without further ado, let's get started with taxes with you being a U.S. citizen living abroad. The first thing is to understand that your pathway defines your paperwork. You're not just filing your taxes as you would being a U.S. citizen overseas, but you're also wanting to make sure that your paperwork coincides with exemptions as well as credits. And what this means is that you could be exempt from income being taxed, and you could also receive credits, especially if you're paying taxes in another country. So this is where you're going to have to look at your specific situation to determine what paperwork you should be filing to ensure you're compliant, not only with IRS regulations, but you're taking advantage of any forms of exemptions or credits. Let's get started with making a good assessment of if you're eligible for exemptions or credits. As a prerequisite to doing a deeper dive into one of the biggest exemptions that many U.S. citizens take advantage of abroad, it's first to see if you meet the requirements of one of these two tests. The first test is the physical presence test, and the second is the bona fide residence test. When it comes to the physical presence test, it's simply a day count rule. You must be physically outside of the US for 330 days or more in any 12-month period. Yes, you can combine days in multiple countries if you are a digital nomad or if you travel for work. But if you miss even one day, i.e., if you're at 329 instead of 330, you could lose the exclusion for that year. The bona fide residence test is where you're saying you're a resident of a foreign country for an entire tax year. So January 1st to December 31st, this is a little bit more flexible, especially when it comes to traveling, because it's not just where it's looking at the day count rules, such as with the physical presence test. It's looking at your residency status for that entire tax year. So it's where, yes, you could take shorter trips back to US as long as you maintain your foreign residence. And that's looking at if you have a home abroad or if you're renting, if you're paying local bills, is your spouse or family there? And it's also looking at the intent surrounding if you're trying to stay there long term or indefinitely. So what are these two tests connected to? The FEIE, the Foreign Earned Income Exemption. So if you're out of the United States for more than 330 days, or if you're in a bona fide resident, you could take advantage of this and also a foreign tax credit. But if you are outside of the USA less than 330 days and you're not a bona fide resident, you would only be eligible for a foreign tax credit. So this is very important to keep in mind as we're going over the details of FEIE, because you would not be eligible if you do not meet the requirements of either of those two tests. What is the FEIE? It's a tax provision where Americans are living and working abroad where they can exclude a portion of their income from U.S. taxation. The most important thing here is that you understand that number could change year by year. As of 2025, that number is $130,000. So this is what you could exclude from taxation. To have a visual of this, what's exempt is if you make $130,000 or less, but what's not exempt is anything over $130,000. But we have to do the math. If you made, let's say, $200,000, you would subtract 130,000 from 200, you would be taxed on $70,000. Now, because $130,000 is exempt, you're only paying taxes on $70,000. The tax rate based on the 2024 tax rate for a single taxpayer for $70,000, you would be paying a tax rate of 22%. So it's important to understand you wouldn't be paying 32% because that would be if you were taxed on the entire $200,000. But 130 is exempt. So you're only paying taxes on the $70,000. So essentially, you're being taxed at a lower tax rate. Another tax provision we're going to talk about is the FTC, known as the Foreign Tax Credit. And so this is what we use to prevent double taxation. And yes, you can use it in tandem with the FEIE, or if you're not eligible for the FEIE, you can still take advantage of the FTC as long as you're paying taxes in another country. So this is a credit that you're claiming for those taxes against your tax liability. You've paid taxes in another country, and the United States is giving you a credit because it's acknowledging the fact that you've already paid taxes in another country. Let's have a look at the math. The first situation we're looking at here on the screen is if you have a $200,000 salary, and the tax rate for Sweden is, let's say, 50%, but the US tax rate is 32%. So here, looking at the table, your income's $200,000. The taxes that you pay to Sweden, if you're a tax resident, is $100,000. The US tax before credit would be $64,000, but the US tax after the FTC is actually 0%. And that is because you paid more in Sweden than you would have paid in the United States. So the total taxes paid to Sweden was $100,000 at a 50% tax rate. But because you paid 36 more to Sweden than to the United States, this is a tax credit that can be carried forward. So think of it like this. This amount becomes a credit that can be carried to offset future US taxes up to 10 years, or it can be carried back as needed because there is an overage. The second situation, if there was an FEIE exemption of $130,000. So $70,000 is taxable by the USA, but $200,000 is what Sweden is taxing. The Sweden tax rate is still 50%, but because the exemption reduced your number down to $70,000, you're actually now being taxed at a rate of 22%. So your income is still $200,000. The Swedish tax paid is $100,000. The US tax before the credit, so 22% on $70,000 is actually $15,400. Again, you still are at zero. That's important. You don't owe the United States anything. The total tax paid, $100,000 tax rate, 50%. So with the FEIE applied, you paid $65,000 more to Sweden than to the United States. And since that excess can't be used this year, it becomes a foreign tax credit that can be carried forward, that can be applied against future U.S. tax liabilities for up to 10 years, or of course, carried back 1 year. So with that being said, without or with FEIE, don't worry if you don't qualify for the FEIE. You can still see here, based on a country having higher taxes, this is how your liability with the United States is at zero. And that's because you paid more in another country. Another common question is, what happens if I'm in a country and the tax rate is lower than the United States? Let's have a look at this example here. So on a $200,000 salary, if you lived in Hungary, there's a tax rate of 15%. And in the US, the tax rate is 32%. In this scenario where the tax rate is higher in the US, so with you paying Hungary their 15%, you would give them $30,000. But with the US, you're supposed to be giving $64,000. So they are acknowledging that you paid Hungary 15%, i.e. $30,000. But after you do the math, you still owe the United States $34,000 because they only give you a credit of 30 grand because that's what you paid Hungary. So the total taxes paid would be $64,000, $30,000 that you gave to Hungary, and $34,000 that you still owe to the United States after the U.S. tax credit via FTC. And this, of course, is at the effective tax rate of the U.S. being at 32% and Hungary being 15%. So this is something that you want to keep in mind. And that's if you move to a country where the tax rate is lower, or if there are no taxes at all, you still would owe the United States at that regular United States tax rate along with the FTC if they do collect taxes from you. But if they don't collect taxes at all, you still would owe the United States at a regular tax rate with no FTC. Let me share with you how that looks. So looking at Panama here, we have 0% tax rate. So you're going to be taxed at 32%. So total income, $200,000, 32% of that, no FTC would mean total taxes paid would be $64,000. So the thing to keep in mind here is the motivation, especially when you're moving to countries where the taxes are low or none for you to take advantage of FEIE, because you would find being able to make, except from the equation, $130,000 quite advantageous. When you're looking at the FTC coming into play, that can be incredibly helpful when you know you're paying an overage of taxes especially when it comes to those higher tax bracket countries. But when you're getting into the lower taxes, zero taxes, you still want there to be the FEIE lending in itself in favor, because the FTC might not cover the entire liability for what you would pay to the United States because you have not paid enough. So that is something to keep in mind. The biggest takeaways regarding the FEIE and the FTC is that you are using these things to your advantage. If you can exclude $130,000 of your income from taxation, take advantage of that. Just make sure you meet either of the requirements for those tests. And then, as it pertains to the FTC, also make sure you're leveraging that to avoid double taxation. Now, when it comes to the FEIE, you're looking at the form 2555 that you attach to your normal 1040 filing. And as it pertains to the FTC, this is where you would want to get the form 1116, and you would also attach that to your normal 1040. However, no matter what it is that you're dealing with tax-wise, even if your accountant is not filing for you, which is always highly recommended, especially if this is your first time filing as a US citizen with you living abroad, you still want to make sure that this is being reviewed by someone who has a tax background to ensure that you're filing accurately and you're also doing it in a legal manner. Now we're going to address some common questions. First is, how do I go about staying up to date as it pertains to everything we just talked about? Easy. You can just go to irs.gov, but an even easier way is by hiring an accountant that understands the legality of tax within the country that you intend on living in, and then also ensuring that they understand the tax obligations of the United States as well. This is very important because you're filling in the United States. You want to make sure you are understanding the legality and the parameters and the requirements of the country that you also are intending on living in as well. Another common question is, should I adjust my tax withholdings? And so what we're talking about is that form that you filled out when you first started working for your employer, i.e. your W-4, where you said, I want you to withhold federal taxes from my paycheck. Now, let's say you have already identified you're going to take advantage of FEIE and FTC. And in the country that you're going to, you have identified that you need to pay taxes quarterly, or perhaps you're wanting to pay that at the end of the year. You may say, well, I don't see value in the United States withholding taxes. Well, even though you don't see the value, if you get your tax situation wrong, there could be penalties. Or if you aren't eligible for the FEIE like you thought, you could experience back taxes. This is why before you edit any existing tax forms, you do want to make sure that you're sitting down and you're consulting with a tax advisor that understands the country, of course, that you're going to, as well as your current situation within the United States. Another big question, what does FEIE not cover? We already know it covers your active income that you have coming in via working for yourself or an employer, but it doesn't cover pension and retirement distributions. It also doesn't cover Social Security, unemployment benefits, capital gains, dividends, or interest. It's important to point this out because some people do consider this income, but it's not the active income that you're earning that comes from you being employed. One big common question we get asked is, if I denounce U.S. citizenship, i.e. you relinquish, do I still have to pay U.S. taxes? And that answer is, it depends. If you're not a citizen, and even if you work for a U.S. employer, if you're not performing the work in country, you could find yourself in a situation where you do not have to pay U.S. taxes. However, if you are someone who is not a citizen, but you are performing the work in the United States, you may have to pay taxes. And the third scenario is if there are dividends that you're getting from a U.S. brokerage, more often than not, yes, you will have to pay taxes on that income coming in. This is another situation where, because now your citizenship has shifted, you would want to look at your tax situation in totality all over again. And I know this is a common scenario. People are thinking, well, if I'm not a citizen, could I get out of taxes? And the easy answer is that it depends on the income coming in, the sources, where you are, all of that. But once you understand the ins and outs of it, it could be advantageous for you. I know we covered a lot of ground in this video, but as you all are considering the countries that you're interested in moving to, please keep in mind the obligations that you have as a U.S. citizen living abroad, in addition to the tax obligations of your new country. If you're interested in working with us to have you find the destination that matches your destiny, please go to www.expatexact.com and sign up for a consultation today.